For ages, I've wanted to speak to a legal expert on the podcast, but I've struggled to find the right guest because there aren't many lawyers out there that can uncomplicate legal stuff and provide practical lessons for startup founders that honestly isn't boring. Until today. Today, I'm speaking to Patrick Rogers, the co-founder and CEO of Clara, which is a game changer of a business that is revolutionizing how businesses form, manage, and grow their companies. After working as a corporate lawyer for global VC firms and investors for over a decade, Patrick saw the need for far more effortless access to everything legal that venture-backed startups need. This problem was validated in his time as a mentor at Endeavor before he took the leap to co-found Clara in 2018. Clara became the first company ever to be a part of Techstars without having written a line of code. Since then, Clara has grown to a multinational business based out of Dubai. They have a strong presence in Africa, especially Cairo, and they're constantly expanding their reach across the continent on their mission to make legal and admin tasks more efficient. In this episode, we talk about Patrick's insight into the problem they're solving, how crucial it is for founders to be obsessed about the problem. We talk about the 0 to 1 journey and how transparent they were with their customers, which made them more excited to join the journey and buy in from the get-go. We get a few masterclasses on simplifying the complexity of legal frameworks and the benefits of registering your business in other countries. We spoke about his emphasis on networks and partnerships and how he was able to unlock and secure partnerships with global businesses like DocuSign. We speak about how they continue to expand globally and the complexities involved in scaling a business in multiple countries, and much, much more. This is an episode with someone who has taken the legal and admin side of business, which, let's be honest, most of us can't stand, and has made it not just easier to understand, but easier to do, and surprisingly, quite nice to listen to. Ladies and gentlemen, Patrick Rogers.
Because if you're not willing to put your money behind your idea, I don't know how you ask other people for their money, quite frankly.
Techstars. Right, that's no small feat to really get into Techstars in the first place.
You know, we had all the continents of the world covered in this group of 10 companies who we're sitting in the same room with for 3 months. Every single company was dealing with the problems that we thought we could solve for.
You acquired a business, right? I don't think many startups do that when they're still a startup or even a scale-up.
You will go through a million challenges and a million deep, dark valleys on the journey. And if you are not wholesale sold on what you're trying to do, you don't have a chance.
Welcome to The Founder Files, the podcast that's like eavesdropping on a conversation with a successful entrepreneur over a fireside chat. Join me, Cameron Coots, through this unique experience of unfiltered stories and insights from scaling founders around the globe as they share their ups, downs, and everything in between.
Patrick, welcome to The Founder Files. I think the business that you have is very much needed in the startup ecosystem, but also very fascinating because you've taken something from professional services and built a tech company out of that. But without taking your story from you, welcome to the podcast. Great to have you here and can't wait to get into this conversation.
Thanks for having me, Cameron. Excited about this one.
So I think before we get into your personal story, Patrick, can you just explain what Clara is as a business and how the business model works?
Clara is a company operating system. Okay, from a digital infrastructure perspective, a company needs to do a number of things. It needs to incorporate. It needs to manage its equity or shareholder base. It needs to create and sign legal agreements for a range of functions. It needs to manage all of its documentation in a data room, and the company needs to educate itself on certain legal concepts and admin processes as it goes through that. So we built a software platform to address all of those needs on an integrated basis.
That was very succinct. I can tell that you've been around the block for a while. Tell me a bit about the birthing of the idea, because everything that you just said is, as a founder myself, is like, this is very necessary about being a business, but it's all the stuff that, one, I don't really know or understand, and two, stuff that I don't really want to do, but I know I have to.
Yes. Yeah. So if you're a business owner, as I am, you put a lot of stuff into the admin bucket. Professional service providers like accountants or lawyers or consultants would otherwise be very differentiated in their approach to those admin tasks. But if you're a business owner, you just see that all as admin. In other words, things that are not contributing to the bottom line of your business. So what we're trying to do is take all of that admin bucket and build a software platform that allows you to manage and automate those tasks as quickly as possible on a best practice basis, and then save you a huge amount of time and money.
Now I'm sold. Now I'm interested. So Patrick, I love that explanation. It gives a lot more grounding to the conversation and what we're going to be getting into. But I think before it got that succinct, because I know it's been a couple of years in the making before anyone can be able to explain what their business is so shortly. Just tell me a bit about your personal background and a bit about who Patrick is before starting Clara, or Clara. How would you prefer I pronounce it?
Look, it's an ongoing debate within the company. I'm North American. I'm originally from Canada, Vancouver specifically. In the Western Hemisphere, it would be Clara. Anything emanating from, say the British Isles on through the rest of the world, it's Clara. And it's a running joke that we have at the company, and it's up for debate. But we go by both.
Cool. Nice.
So yeah, originally from Vancouver. I'm a lawyer by trade. I worked for a couple of the major U.S. law firms who have global presence. And 2015, I was working for one of those firms in Dubai. And in the past year, had been getting increasingly approached by entrepreneurs or would-be entrepreneurs to see if I could help them as their lawyer with everything from venture capital term sheets to building an ESOP, restructuring offshore. But my firm it's one of the top 10 global law firms. They weren't interested in taking on startup clients. And I started looking around the ecosystem to see what lawyers were out there who could actually help these entrepreneurs restructure, raise a venture round. And there were none that were actually helping the founders. There were a couple that actually knew how to do the work. This is very early in venture days in the Middle East region. But they were primarily working for the VC firms because the startups were just too challenging to advise. But I thought there was a big opportunity there, so I ended up quitting my job with Lee, one of my current co-founders at Clara. We started a law firm on a very differentiated model than your traditional law firm to support founders around the world with a specific focus on emerging markets to restructure and raise venture capital rounds. And we learned a ton about the founder mentality when it comes to dealing with legals, how much anxiety it induced in them, all the frustrations that the investors and the lawyers had in investing in these startups or advising these startups. And we fell in love with the problem. And we thought we could build a software product that could turn non-experts, i.e. founders, into experts by putting the guardrails on them when it came to doing all this stuff. So everything from company formation, document creation, data room management, cap table, and equity management. And that's where we are today with Clara, kind of 5 years post-launch of the product.
So I want to just double click now on the fact that you've got two businesses, right? Because the birthplace of now the tech company came from having a legal company, and you and your co-founder there obviously got these earnings, went and built a tech product. Talk me through the journey and decision of why productizing this, and also how. I feel like that's a very complicated thing to do, taking something that's inherently requiring professional services and a lot of expert guidance and building a product out of that someone can just consume from. Can't have been easy.
No, certainly not. It's a very thorny problem to solve. Again, I think it's critical that we're in love with the problem, because otherwise it's very challenging. But at the same time, if you're operating in the legal sector, which is probably globally the most regulated sector from a professional services perspective, particularly across common law jurisdictions, because lawyers are self-regulating. This is something that most people don't understand. In most common law countries, whether it's the UK, the US, Canada, Australia, the lawyers stand apart from the government. So, as an example, lawyers get to decide whether a law school should be created. Lawyers get to decide what the parameters are for qualification in their jurisdiction, i.e., who can become a lawyer. They self-regulate advertising rules for legal services, and the government has no say in that. The reason historically for that is because the lawyers were kind of placed apart or stood above the government because the assumption was that the lawyers could protect the people from the government if the government was encroaching on people's fundamental rights. So it was made that the government cannot regulate the lawyers. The lawyers are self-regulating. Now, that is a great thing conceptually, but in many places, it's also led to a bit of cartel mentality, as you can appreciate. So if you have this super protected position, i.e. the government can't tell you what to do, and you get to set your own rules for who can get into the club and how the club operates, there's a fine balance there. So when you're dealing in the legal services arena and you have that as the underlying fundamental of your operating environment, it presents a lot of challenges. It also presents a lot of opportunities if you can get it right, because you are essentially presenting a service as a counterpoint to the existing service providers that is just so fundamentally different and obviously so fundamentally more cost effective than what is available to the average person when they go out and try to do some of this stuff on the legal side. One of the inspirations that we took when we started thinking about building Clara was something like TurboTax in the US, which I think came online in the 80s. So TurboTax is a software product that allowed your everyday person to do their own taxes. And previous to the launch of that product, if you had gone and asked any US accountant whether their clients could do their taxes on their own, they would have laughed you out of the room. Like, well, there's no chance. This is very sophisticated work. It's an art form, right? Turns out it's not. You just had to build an intuitive enough software product that put the guardrails on the user of that product, i.e. the person trying to pay their own taxes, that kept them inside the boundaries of what they're allowed to do, educated them on a just-in-time basis on how they should be entering data into the system, educating them on concepts. And again, I think that's been a big inspiration for us and has allowed us to put the end consumer of our service in the driver's seat, whereas previously they had no choice but to go engage a very expensive professional service provider.
Yeah, I really understand what you mean when you say you fell in love with the problem, and not the fact that this is this is not the first time this has tried to be solved, but obviously in a very different domain, because accounting is one of those professions that we've seen so much software coming out that's, remove the need for bookkeepers, right? And as the chartered accountants is a different story. And obviously the same is going to be in any profession. But I think you're quite leading the wave in terms of doing this for the legal profession. So you've spoken to me about the problem in terms of why you wanted to start this and why you cared and why there's such a fundamental need. Talk to me about this, like the actual founding journey practically. I mean, you've got this legal firm on the side. Is this something? At what point did you start really committing to this and building your first team? How did you essentially go to market, and how did you go and build the product? Just talk me through the first year of Clara.
Sure. So first year of Clara was really 2019. We parachuted out of the law firm, and the law firm has since been sold. We needed to kind of segregate ourselves from that because we thought we were onto a really big idea, and we needed to go all in. So from a time and operational perspective, we parachuted out of the law firm. 2019, myself, Lee, our two other co-founders, Arthur and Ahmed, brought them on. We put the company through the Techstars program in Dubai at that time, in 2019, graduated 2019 and really started, I think first line of code was, Q1, Q2, 2019. And it was really just, we knew what kind of our goals were, but in probably stark contrast to a lot of the tech companies that you speak to, Cameron, we didn't really have an example to look at and say, okay, we want to do that, but we want to do it a bit differently. So because we're an OS,
you're doing something that never existed.
Yeah, right. So there were amazing point solutions that we could look to at the time for inspiration. So Carta for cap table, some amazing digital company formation solutions out there in Singapore, the UK, the US. There were great document generation and execution systems. There were great data room solutions. But there wasn't anything we could look to and say, well, look at this. This is basically an OS. It's doing all of this stuff together, and all of these features are speaking to each other, which was what we wanted to do. We thought it's not enough to just do one thing really well. To really move from 0 to 1, you need to do all of it together and have these things speak to each other. And there was nothing like that, and certainly nothing on a multi-jurisdictional basis, because we had such a firm understanding in our experience in the venture capital space of the key global nodes or jurisdictions that investors and lawyers want to use to structure investments, which is a big part of our underlying value proposition. So we definitely bit off more than we could chew, because we had very big dreams and big ambitions. A key mistake that we made in the opening stanza, say the first year, if you want to use that as the framework, was that we tried to do kind of everything at once. So we went very wide and shallow. We didn't go deep on one feature. For example, let's start with digital company formations. Let's do that really well for one jurisdiction. And then let's do that for a few more jurisdictions. And then let's launch the cap table. And then let's do document generation. And then let's perfect the data room. We kind of did everything in a very shallow way immediately in that first year. And, from a proof of concept, it was great. And it allowed people to see the vision of where we wanted to go, because there had been nothing like that built before. But you scratch a bit further under the surface, and it's like, we need a lot more depth here to make this really useful. And, we're there now, and it's an ever improving project. It's never done. But that was, I think, an error that we made in the opening phase of things. However, it did allow people to get inspired by the idea and align with the vision of what we thought we could build.
And I find that's to be a very tricky balance, because I see it so often with early stage founders. And the simple way I explain it is you're trying to make your vision a reality too quickly. And you're not able to get the traction that you need where people are going to stay with you. And the point is, it'll look exciting, but how do you prioritize? What is it that you actually build? Because all of those features that you mentioned in terms of that breadth need to go deep as well. And the only way you can keep doing them all at the same time is to just rapidly expand your team as your customers grow, but then your cost base is way outpacing your organic revenue growth. So,
yes.
But at the same time, as what you're saying is it actually gave people the use case to see, I see where this is going. And when we're talking about those people, are we talking about, is this investors? Is this employees? Is this customers? Who are the people that looked at this and saw, I see the vision here, I see the potential, let's get on board?
All of the above, right? We needed to inspire our team members to say, if you're going to take a chance and quit a high-paying job to come and join the team and take a risk, they want to be inspired. They want to see a vision of what's there. And, our team is incredible, and they've sacrificed a lot to come on board the Clara family. And again, everyone is very mission driven in our team, and they feel very passionately about the problems that we're solving for. And they're excited about the fact that we're building a global company that has a product that hasn't been built before. And we're doing so from emerging markets, as opposed to 99% of the emerging market companies out there that primarily have copy pasted other ideas. And we're very proud of that. So that's for our team. And then for investors and customers, absolutely the same thing, right? This is not a nice to have. Our solution is not a nice to have. This is something that, particularly if you are raising from sophisticated investors, whether it's venture capital firms or you're operating in the private equity space, whatever it is, you have to do this stuff properly. And it's really expensive. Yeah, this is not, hey, I'm opening a restaurant or a coffee shop in Cape Town. I need to incorporate a company and I need to do an annual filing. No, this is, okay, if I'm doing this business, it's going to require multiple companies in multiple jurisdictions. We're going to have multiple classes of shares. We need to worry about vesting. We need to worry about share option plans for the team. We're going to be raising capital. We have to do a lot of thought around intellectual property and how that's being generated and captured. This is expensive stuff, and you have to do it. You have no choice. Even if you don't want to do it, you have to, because you need to raise capital from outside investors. It's not your own money. It's too expensive to launch a tech company for the vast majority of people, right? It requires millions of dollars and multiple years of loss making in most cases. So painting that vision and having all of those key stakeholders, whether it's investors or customers or team members, be able to see and believe in where you want to go, even though you're a few years from getting there right at the outset, it's important.
I agree. And you provide a very good example. And again, this is the trade-off that I mentioned between, there's one thing being able to articulate the vision and the direction really well in a sense that's compelling. It's a very different story to actually be able to show it and show what the actual potential is and where it can go. But that makes me want to ask, tell me about the first couple of customers, because just in terms of the product and how it works, if you're able to go broad but not necessarily deep, tell me about the challenges and mistakes that you made in acquiring the first couple, maybe losing the first couple, and just what were the lessons there?
So I'd say we had a few advantages that most startups don't have, in the sense that our software was translating our domain expertise out of the gate. So we'd been venture capital lawyers for a number of years, and we were known in the markets that we were operating in. Investors, VCs really appreciated and valued all the work that we were doing to support their portfolio companies and advise them and get them properly structured. So we had a lot of goodwill in the markets that we were advising companies in. And when we went out and started telling people that we were going to do this thing that became Clara, we had a ton of support. We had nothing built, but just on the basis of the idea, people were like, as soon as it's ready, as soon as you have anything to test, please bring it to us. We'll get our portfolio companies to use it. Because again, we're only solving problems for the founders. We're solving major pain points for the VCs and investors, as well as the law firms. And I'm sure we can come back to the kind of counterintuitive nature of thinking through how our product doesn't scare lawyers or isn't competitive to law firms. It can, in theory, be seen as that, but really the lawyers who see where the puck is going, to use a bit of Canadiana there, is that very soon, if not right now already, you can't get paid to do a lot of this stuff because clients just see it as commoditized work. So if you've got a software product that can do a lot of this stuff, particularly on the early stage side, the software should be doing it and the lawyers should be focusing on the more value add stuff. So those first few customers, it wasn't difficult, right? We knew a lot of the players in the markets we were operating in. Law firms, VCs were referring their portfolio companies and clients to us saying, try this thing, work with these guys. They're looking for customer feedback. This product's, if they can execute, it's going to be revolutionary. It is nowhere close to that. It's going to be a lot of human involvement, a lot of humans in the loop in walking you through stuff. And, I think like any good startup story, that's what it is. It's a lot of blood, sweat, and tears. It's a lot of human time as you kind of nudge the software product along the development journey.
And that's immediately what I was thinking when describing this, because, and I'm so curious to see where the offering, not just product, the entire offering is now compared to where it was in the beginning. So there's a whole saying of, do what doesn't scale at the beginning. And I can imagine what the front end versus the back end looks like. In this situation, it's like front end software, but it's just still a bunch of lawyers, right? Being able to providing and guiding the journey, but via the platform, making loads of assumptions here. So then this leads me to my next question is, tell me about the first core team. And what I mean that from core, first organizational structure, in terms of what were the key roles and functions that you needed in the business to really be able to deliver on what you were putting out there and maintaining that goodwill and reputation that you'd already developed as the founders?
Yeah, so thankfully and probably necessarily, we have VC lawyers on the founding team who had worked at some of the most premier law firms in the world. Obviously helpful. Those, me included, were able to do a lot of the early business development and bring in customers either through channel partners or directly. And then, of course, we needed a tech team. I'm not a techie in any way. Arthur, one of our co-founders, I actually did my undergraduate degree with at UBC in Vancouver, and he was, as we started thinking through this, living in San Francisco at the time. He'd just come out of an e-commerce startup that he'd been building there. And I went to him just to kind of soundboard some ideas around what we thought we could do. He previously raised venture for his startups, so he understood the problem very well. And he was intrigued enough in what I was talking about that he ended up flying over here to Dubai, where I am actually right now, to discuss the potential of this idea in more depth with the rest of us. Suffice to say, he became a founder of the business and has moved along with us with the journey. We quite early on in the piece added Gustavo, who's now our acting chief technology officer, who has decades of experience in the space across fintech and a whole bunch of other key verticals that are important to us. And we had kind of an ops or implementation team, small one at that point, that could help with things like filings to incorporate companies under the laws of different jurisdictions. And Catherine on our team, who was one of our earliest joiners and who still leads that whole division of the business. Again, someone who left a high-paying corporate job to come in because she believed so deeply in the idea of what we wanted to build. So I'd say in the first few months, the team was maybe 8 to 10. Something of that nature with some outsourced support. But we were generating revenue kind of really from day one because we could do stuff offline, such as incorporating companies. And by offline, I mean, let's communicate over email and send docs back and forth. That allowed us to build outside of a theoretical environment. So just by, again, pushing people through these various processes, incorporating companies, initially helping them build cap tables in Excel and other things that create agreements, other things of that nature, and then showing our customers design work of how we were going to translate these processes into a software product. From the start, we were kind of learning as we were making money.
I also want to get into that with a bit more depth. There's a lot of vulnerability to that. I think there's a lot of honesty. You were building in the open. You were saying to your customers, this is where we're going, that we've got a very clear strategy in terms of how we're building the product. We know that we know what we're doing because we've been in this game for a while. So what was that like? And the reason why I want to ask is because I can imagine a lot of founders, there's so much anxiety. Everyone talks about imposter syndrome and not feeling like competent, no idea what we're doing. And one thing I'm trying to scratch away at is I'm still torn. This whole fake it till you make it thing is like, I'm torn between I don't believe in it, but also think it's necessary sometimes. And like in this situation, what you're doing is there was no faking it till you make it. It was just like, we're not faking anything. We know what we're doing from a service perspective, from a product perspective, we know where we're going, but do you want to walk the journey with us? And I think what's quite counterintuitive for people, and I think the reason why I say counterintuitive is just how the emotional category of fear operates, is that I'm going to get turned away at the moment that I say that it's still being built, and to build with my customers and build with our people instead of just say, hey, it's ready, and then being in a position of over-promising and under-delivering. So was that something that was very thought through, or was that something that was just second nature to the founding team of, we're just going to be totally transparent from the get-go?
We had some advantages a lot of other startups don't. And let me kind of contextualize this a bit. So, I've spent a lot of time in Africa, whether it's, Lagos, Cairo, Cape Town, Nairobi, all places in between. And when I'm there and I'm meeting customers or potential future customers who are generally founders of these tech companies, a very high percentage of them ask me for input on what they're building. Yeah, it could be an e-commerce play, it could be a fintech solution, whatever it is. It's very natural for founders to ask other founders for input on what they're building or support in some way. So if you think about our initial customer set, when we really had nothing built on the product side, these are all tech company founders who are very happy to provide support, whether that's input or just say, look, I know you're building, so I'm happy to be a bit more inefficient in procuring this service from you because I really believe in what you're doing. And if you guys can actually crack this nut, this is revolutionary for the work that we're currently having to do over email with expensive professional service providers. And I see it as this kind of a pay it forward thing where if I support you now and 5 years from now, this thing is humming, that next generation of entrepreneurs are going to have it so much easier than I did. So it wasn't actually challenging to do that. As you said, we were very upfront in explaining where we were right now in the process but painting the future vision. And I can't think of a single customer that kind of pushed back and said, no, I'm just going to do it the way I've always done it. I'm going to go engage this law firm, whatever.
It also reminds me that starting, running, building a business is inherently very complex, but in certain ways, it's just quite uncomplicated. And the point that I'm making here is that if there is a very real problem that you know can be addressed and you can see and paint the picture of that solution and be a credible person or business to lean on in the pursuit of solving that problem, you get the situation now of I'm not just pre-ordering, right? I'm going to be beta customer. I'm bought in to the end. I know what you're solving for, and it's a very meaningful problem. The reason why I say that is because it's so fundamentally obvious, but there's so many tech founders that care more about being tech founders than building a business that actually solves something important.
Yeah. I mean, the headlines are gotten by the fundraising announcements, but the fundraising announcements don't tell you jack about what the product or service is actually doing and how it's supporting people.
Exactly. And I think that's something that also I can imagine came from your experience so significantly, that it wasn't just really understanding the venture capital and tech startup ecosystem globally. It's also understanding all of these press myths and these identity creations around the sexiness of entrepreneurship and being a tech founder and being VC backed. And it's really hard. It's really complicated. There's a lot that's going on there. And at the end of the day, it's still a business, but a business now that has got more complexity straight out the gates because of how much money there is from other people involved to do so. That I think you were able to approach this with a lot more wisdom than most first-time tech founders are able to do so, because you weren't. Yeah, there's a noticeable lack of naivety that comes from you starting the business that is rare for tech founders, even if they understand their market super well, because of what you were able to bring to the table. It seems like it was effortful, but not necessarily difficult in terms of the first journey, if that makes sense.
Yeah, I get what you're saying. I think we had a very rock solid vision of where we wanted to get to, but also understood it was going to take a while to get there, right? We weren't, building a new kind of e-com or food delivery platform where we can just look at a bunch of stuff and say, okay, let's localize that. This is, again, I come back to this. It's very challenging to build something that has not been created before. And I would guess that most of your guests wouldn't be able to say that hard on hand, right? A lot of people draw inspiration from other products and then localize them. But that's also a massive opportunity, because if you're right in your assumptions around there being a demand for a service that has not been created before, and then pair with that the fact that we play within let's call it the regulatory perimeter. Yeah. So you're playing within a regulated environment, which is tough to access. You can't just with $100 million say, oh, I'm going to go build that right now. Well, you could, but you're not actually, you might be able to do 90% of it, but the last 10% is critical, and you're going to need to interface with governments or get regulated or whatever it is. So there's substantial moats built around the business. And then layer on top of that, the fact that we had as you said, very firm understanding of how this whole thing operates globally, not just in one region of the world. So we thought we could solve a very thorny problem. We thought we could solve it globally, but it's a very long path from that kind of ideation to where the thing is really working and people know about the software globally. And it's taken twists and turns along the way for sure. But yeah, we had a very firm vision, and I'm happy to say that it is working. We have a long way to go, but we're making good tracks. And the other part that you touched on, I wanted to bring in this concept of you're probably familiar with this, painkillers versus vitamins. And I think there's been a bit of an aberration, let's call it the last 15 years in the kind of tech or startup space, or 10 years, where for a good chunk of that money was essentially free, and you saw these crazy valuations and businesses that were raising but hadn't really made $1 revenue. And that's obviously, that environment is no longer there, but I don't necessarily know that we're going back to it anytime soon. And so if you're focused on vitamins, i.e. nice to haves, versus painkillers, i.e. need to haves, you're going to have a difficult time finding success with your business. And we knew right from the start that we were dealing in the painkillers. In other words, you have no choice but to do these things. And your options are to go pay an expensive human to do them for you, or if we can get our product to a place where you can do it yourself, i.e. turn the non-experts into experts courtesy of our software, that was going to be a winning combination.
One thing that just clicked for me, which was clear throughout, but we haven't actually spoken about it, is your own fundraising and whether you and when you raised funds. Because the benefit of what you're doing is the investors are also the customers. So for them, this is this is a very easy thing. Well, it's got the pros and cons. It's very easy to sell in the one position in terms of what's the concept and the idea, but it's also very easy for them to scratch it and break it down because they understand it intimately well. So talk to me about your own fundraising journey. I mean, was that there in the first year? Were you entirely bootstrapped off the back of the first business? What happened in terms of your own approach towards raising capital?
We bootstrapped for the first little bit, and you do have a strong audience, so for the founders listening to it, I think it is important that you do that, and you do it with whatever means you have. It's important so that you can test the idea against yourself, but I think it also makes your fundraising journey a lot easier. So, my wife and I have done a decent amount of angel investing over the years, and we would never invest in a company where the founders haven't bootstrapped the first piece of it. Because if you're not willing to put your money behind your idea, but I don't know how you ask other people for their money, quite frankly. So yeah, you might be sacrificing and quitting a job, but you should have been thinking about that for the previous 6 to 12 months and banking a substantial portion of your salary so you can bootstrap that first few months. And I don't know many founders of worth that haven't done that. So whenever I see founders coming to me trying to ask me or other investors to pay for their exploration of an idea, I generally assume that's not going to work because their mindset is not the right mindset. And you will go through a million challenges and a million deep, dark valleys on the journey. And if you are not wholesale sold on what you're trying to do, you don't have a chance. So yes, we bootstrap. We did raise capital early on. As I said, we went through the Techstars Accelerator. They were our first institutional check. And then paired with that, we raised initial capital from a number of other investors, both angels and institutions. We've raised a few $1 million so far of seed capital. We'll do a Series A next year off the back of probably our biggest product launch to date, which is going to go live in a few months, which is a fintech product. So that's where we are right now. We have raised, as all companies are right now, we're trying to appropriately manage our cash flows while at the same time trying to ensure that we don't top out in terms of what we can do as a business by not having the right team members on the bus with us. So we are continuing to hire people, but we're not going crazy in the hiring department. So we're we're growing revenues and we're scaling the team, I think, at an appropriate level. And once we can put a significant chunk of capital in the bank next year, then you'll see us kind of go into a different gear.
Awesome. I can't wait to find out more about that when we get to the end of the conversation, what the future looks like. But Patrick, just another example of the unfortunate amount of naivety that still exists with early stage founders, right? I mean, because what you've said there is, for me, something that's also in many ways relatively obvious, because there's nothing that's going to make a business successful except for the total passion and commitment of the founders, right? And if you're at the get-go not willing to put not even necessarily your own money, but a huge amount of your own time, at least, into building this, and you want other people to contribute for that, and over-hiring in the beginning or getting other people's money in the get-go, that's just, again, as you pointed out, a recipe for likely failure, just because how much do you actually care? And you're going to go through very difficult and hard times, and if you don't care about the problem you're solving, then why are you doing this in the first place? And if you cut that down a little bit deeper, often founders are building the business for themselves, right? I don't want to work a 9 to 5. I don't want to work for someone else. I want to make a lot of money and do all that. And not a lot of people, and there's a valid personal motivations in one's career, but it's not a motivation to start a business, because immediately it's putting you on the back foot, because you're building this for yourself and not for anyone else that actually matters, who's actually going to pay you and create something sustainable. And the reason I point that out is because you speak about it like it's obvious, but it frustrates me how not obvious that is to so many people.
Yeah, I think if you're an angel investor or you're contemplating investing into a startup business, and that can run the gamut, that could be a tech company, that could be a restaurant, it could be whatever it is, you need to understand the game that the founder is playing, because there are a number of games that founders can play, and I don't use the word game in a pejorative sense, right? But people are playing different games. Myself and our team, we are playing in the venture growth and aiming for world domination, right? Someone who's starting a restaurant business in Cape Town is playing a different game. We're both business owners, but we both need to be intellectually honest with what we're trying to do, what our goals and objectives are. Now, that restaurant owner, I used to work in F&B growing up. That's not an easy business either, right? You work hard. That's blood, sweat, and tears. But from an investor's perspective, the profiles of potential returns can be substantially different. And the risk that you're taking with your capital, investing into a tech startup, can be substantially different than investing in what you might be referring to as a lifestyle business. Yeah. Your capital could be safer, but the returns could be substantially lower. So just both parties having an understanding of what game the founder of the respective business is playing is fundamental to ensure that relationship between founder and investor doesn't go off the rails.
100%. A thought that I heard someone say quite recently that I liked is, every business is a lifestyle business. It's just the lifestyle that you're choosing. And at the end of the day, are you picking the lifestyle of being this, hyper growth VC backed startup and the lifestyle that comes with that? Or are you picking another option? Every business is a lifestyle business. And I like that, because it made me think that at the end of the day, we're still choosing this. This is the choice that we're making. And to say that, is it lifestyle or is it, scaling and growth?
But is it a blend, right? I know plenty of businesses that go through different trajectories. They might start off thinking that they want to be a traditional venture-backed tech company, kind of grow at all costs, burning the candle at both ends. But then the business model goes through a variety of changes over time, and maybe the market wasn't as big as they thought it could be, and it turns into more of a traditional business over time. So it can be both. And the other thing I would say that you as a founder, you might go through different phases of energy, right? Some phases of the venture might require just completely unsustainable energy and focus, but you can't do that forever. but you might be able to grow the team to a certain point where your life can become a little more normal. Not completely, because we're sadists, but it's not monolithic.
And this is fundamentally what we believe in at Metavolve, is what our entrepreneurs want at the end of the day is to build a really successful business, but also have the time and money to live the life that they want to live. They want to have their cake and eat it too, the way I like to put it. And you can't have the one without the other. But the point is in order to have that, you need a sustainable business that's not dependent on you. And that's a journey in itself that requires certain seasons of hyper-focus and growth, where you start building internally instead of just externally, whether that's removing the operational dependence on you as the founder, removing sales dependence, building out operational processes, systems, and structures so people don't have to ask you, where do I go get pens? You can build out your leadership team so they like, you've got other people that are building this and trusting it. But yeah, this isn't about Metavolve and what we believe in, but it's fundamentally critical. Like, it's at some point or another, and it's the same philosophy around exiting, right? If you want to have all that, if you want to exit, build something that's sustainable, and know that from the get-go.
Let's pause here for a moment. If you've made it this far into the episode, it's probably because we're talking about things that you're trying to implement in your business. You found your sweet spot in the market, you've gained momentum, and you've already been through a phase of growth. Because of this, you know that on the outside, growth is super sexy, but on the inside, it's incredibly difficult to achieve and to sustain. So now I've got a question for you. Now that you know the sacrifices it takes to achieve growth, how much time are you currently spending thinking about your direction and your next phase of growth? I bet not as much as you'd like, because you're still in the thick of it. Leading, deciding, pushing for performance, pursuing new opportunities, maybe even thinking about selling the business. See, your story is yours. But this chapter where growth meets complexity, this is when things get hard. Because you can listen to insights from podcasts and stories from people that have been there before, but applying it to your context is a completely different ballgame. So let me help you. If you want to have a 90-minute, no strings attached conversation with me, then head over to Metavolve's website in the description of this podcast below, and let me help you navigate this next phase of growth. Because at the end of the day, building a great business is complex, but it doesn't have to be complicated.
Patrick, Techstars, right? That's no small feat to really get into Techstars in the first place. And this might seem like a stupid question because it's Techstars, but why did you choose to go and apply to be a part of Techstars Accelerator?
This is actually a great story, and there's a few people who might listen to this who will have a chuckle. So, Techstars was actually a client of the law firm that I built. So we knew the Techstars team, we knew the Techstars legal team, we understand the problems they were having investing into companies in emerging markets quite well. I've been a Techstars mentor, and I had been asked to be on the selection committee for the Techstars Dubai cohort. So I was one of 5 people, along with the MD, Vijay, who were going to be choosing, these, at the time, the cohort was 10, these 10 great companies from around the world who were going to come to Dubai and accelerate their products. And I went in for the meeting to discuss what the selection committee process would look like. And Vijay asked me, how we were getting on. And I told him we had this idea that we were contemplating around doing a tech company that could solve all these legal problems with an initial focus on tech founders as the target audience. And we got completely sidetracked off the selection committee discussion. And he said, look, I'm the MD, so I have a certain amount of discretion. I'd like to offer you guys a golden ticket to come into the program. Your wait, like the deadline expired.
Nepotistic at all, eh?
The deadline expired 2 months ago. But if you guys can execute on this, you're going to solve a huge pain point for Techstars. And you already know the legal team, so you're seeing how we are diligencing these companies before we can invest in them. So you guys know exactly what you're doing here, and you know this would solve a big problem for us. So why don't you come build it from the inside? And I think we're probably the only Techstars company to ever get admitted without having written a single line of code, right? I would venture to guess that is actually still a true statement. And that was the case.
Wow.
And
just goes to show how significant the problem is and how salient it is for the people
totally
around
right.
you.
But I think he gave us 24 hours to decide because we were so far past the deadline and they were making the decision. So we had to I had to recuse myself from the selection committee.
Yeah, that's some serious conflict of interest.
Yeah, and then go present 48 hours later. Obviously, we got in, and Techstars is a strong channel partner for us today, and we also in that initial seed round brought in 500 Global, formerly 500 Startups, as an investor. They had a similar mindset. They're like, look, if you guys can do this, this is going to be amazing for us. So yeah, we'll put some money in this. We've brought other accelerators such as Plug and Play onto the cap table. They've made an investment. So that's a key channel partner for us. You asked about Techstars. The program was great. We learned a lot. We considerably expanded the network. It got us a lot closer to the Techstars legal team, and we continue to build relationships to this day to help them get more efficient from the inside out, and in doing so, obviously make the founders' lives a lot better.
What would you say is the handful of main learnings that you took away from your experience as part of Techstars?
Main learnings from Techstars. Look, we had a very diverse group of founders in our cohort, and we've worked with a lot of Techstars cohorts since we went through. But we had companies from Hong Kong in the group, Eastern Europe, Africa, Middle East, the US. And it was amazing to see in a microcosm of 10 companies with, say, 25 founders, how common, every single company was dealing with the problems that we thought we could solve for. So it gave us this instant boost because we saw that, we had all the continents of the world covered in this group of 10 companies who we're sitting in the same room with for 3 months. And of course, it was the best customer feedback ever. We're sitting beside these founders day in, day out. They're from literally every corner of the globe, all dealing with the problems that we thought that we could build solutions for, whether it's company incorporation, restructuring, cap table management. How do I create these legal agreements? And all of the modules at the Accelerator were fantastic in teaching about marketing, finance, whatever it is. But I think probably the best thing that came out of it was just that instant validation that the problem was there in abundance and it existed everywhere. And no one, and these are very smart people who are tech-minded, tech-savvy, have great networks. No one could point us to any other solution anywhere in the world that was really helping them with these things in a comprehensive way. So the validation of our theory or our hypothesis about what the problem was and how a solution could be built to address these things holistically, that would, I'd say, was the most important thing for us.
Sure. That's not just the true market validation, it's the validation that this doesn't exist globally. And I think that's a very rare opportunity to get that done so efficiently. And also part of this is just, again, it can never be understated how important network is, right? Just you and Techstars to begin with, your network and understanding of the problem, your ability to be able to generate customers or advisors or people to just bounce the ideas and problems and points off. You mentioned now the founders that you had within Techstars at the time in that cohort and their networks and being able to leverage off that. It's such a critical point. So I'm still learning about accelerators, right, and how they function. I know that there's a general model and a general point. I mean, it's in the term accelerator, but a lot of accelerators function very differently. And I know the points around access to capital, access to markets, access to network and experts and learning are the fundamental parts of it. But you're one of the first situations I've heard of where actually being part of the accelerator itself brought you clients. So you joined Techstars still within your first year of Clara's founding. tell me about how that accelerated your go-to-market and then your subsequent growth after that.
Certainly. So obviously we had Techstars in a position, they're a global organization. They run accelerator programs around the world where they were now financially incentivized in our success, as opposed to simply seeing it as a solution that could potentially help them. They're now financially incentivized. So just deepening the interest in what we were trying to achieve. And certainly it allowed us to get deeper into the organization, speak to more people, understand their pain points a lot better, get a bunch of new startups from around the world using Clara at their invitation or suggestion. So getting us into to new pools of potential customers. And the reason why using Techstars or our other channel partners like 500 Global or Antler or Plug and Play as a filter is so powerful for us is because their acceptance rate, so the number of companies applying to get into these programs versus what they accept, is like under 2%. So this is kind of the cream of the crop of global startups that are getting into these programs. And we get to then have direct conversations with these very promising startups or present our solution to them essentially at no cost, right? So our cost of acquisition of a lot of our customers is zero, but we're also getting the most premium startups out there in many cases as a result of this channel partnership approach. And Techstars, as well as 500, were the initial accelerators that we relied on for this. We had many speed bumps along the way. Again, we didn't have much of a product built in that first year, and we had a lot of people that displayed a lot of patience with us. Both,
yeah, I mean, you had no code.
both the accelerators as well as the founders themselves. But I keep coming back to this point of painkillers versus vitamins, and everyone knows, and there's no debating it, that all of this stuff is super painful, paired with being very expensive. So people were willing to give us the benefit of the doubt and be patient with us and give us their time, and we're very thankful for it as we started to develop the product.
Sounds like a pretty awesome experience overall, and really validating in terms of the business, which I think is quite interesting from someone who already knew that the problem was there. But Patrick, I think we've spoken so much around like the first year and the founding start, and the reason why I wanted to focus so much on the beginning journey is because I want to reiterate, yours came from one of knowledge, experience, lack of naivety, knowing the problem, etc. And that's all in the first year. So many people go down a couple of years into the journey, and they're revenue generating, they've got a proper team in place, etc. But these are still the fundamentals that make it hard for them to still get past certain points because they didn't get that right, and they have to go back to the drawing board at some point or another. And for you got that right very much from the beginning. So let's talk about after Techstars now. I mean, this is still, we're talking 2020 at the time, I'm assuming, is when this would have finished. You're still just over a year into it. I mean, you're 5.5 years down the line now. What was your next, significant, I'd say, growth period?
Well, before we get into growth period, I mean, less than a year after graduating from Techstars, obviously us, along with the rest of the world, got punched in the face by COVID, right? That was an interesting bit, and we didn't really know how it was going to go. By the time we got into, say, March 2020, when the world went into full lockdown mode, we had a software product that was out there. People were using the software to do a few initial things. But, we were expecting a massive churn of customers, a massive drop off of new business. Obviously, the amount of people that were made redundant and fired was off the charts. People were scared. We did not expect people to go into growth mindset and new business formation. But we actually had a great COVID. We continued to grow through the initial 6 months. We didn't backtrack on a revenue basis, and COVID overall did have this supportive effect for us in that people who had really never tried to do things digitally before and did everything in the physical environment. Think of wet ink signatures on pieces of paper if you're dealing with legal stuff, right? For incorporating a company or signing an agreement. Many of the law firms now that we partner with, the key decision makers there had never even heard of something like DocuSign. It was anathema to their whole thing, right? The artistry or the craft of the profession and the ceremonial nature of doing in-person meetings, wearing suits and ties. COVID blew the lid off all of that and allowed the decision makers of organizations, I should say, to get past a number of these deeply inefficient, old school hand-to-hand combat practices and start viewing all potential service solutions out there first from the perspective of digital. And then only if a digital solution isn't possible, then from the perspective of an analog process. Interestingly, and again, part of the kind of barriers to entry or the moats around our business is that you can't just do stuff if you're addressing legal problems. If it's going to be done properly, you actually have to layer on top of that what the laws and regulations are of a given jurisdiction. There are many countries out there, and they all have varying degrees of allowances or disallowances for certain things. Like electronic signatures are a perfect example. These are still not legally recognized in a huge number of countries around the world. And COVID drove these lawmakers who should have done this decades ago to, from their living rooms, adopt laws that said, okay, digital signatures are now legal. Since we're not going to be able to see each other for a long time and people aren't allowed to meet, and the courier system isn't working very well, let's quickly adopt digital signatures as a legal process. Now, a number of common law jurisdictions in 2020, of course, recognize the validity of digital signatures and digital processes for doing things like incorporating companies, but a lot didn't. And COVID accelerated massive. I can't think of a more forceful accelerant than COVID to get people aligned on the huge efficiencies to be gained from doing these things digitally. But before you could, anyone can sign any piece of paper digitally. But if the governing law of the document is stated to be in a certain jurisdiction, still today, that would not be a legally recognized document. So if you needed to dispute something under a legal agreement and it was signed digitally, you have no case because in the minds of the court, there is no document because it hadn't been signed with wet ink. Again, this is a bit nerdy on the legal side, but also kind of fundamental to what we're trying to build, right? We only address those jurisdictions where things can be done digitally. And of course, these are the jurisdictions that are preferred by investors around the world, whether they're private equity firms, venture capitalists, what have you.
It's just an amazing, perfect storm for you because any resistance to change someone might have in terms of legal practice, which is predominantly pen and paper, as you've mentioned, would have had to have changed in a remote world, just because now the inefficiencies of wet ink when social distancing and lockdowns happening just means that we're going to make everything come to a halt. So we need to change. I think the second thing that would have been incredible for that and what that would have unlocked is that it's a huge piece in your user experience, but also in your features and value propositions for your customers. Instead of having an enabled software platform for certain aspects and certain documents, it can now be totally embedded because the digitalization of a lot of documents just becomes native to what the product is instead of, well, let's sign the document and scan it and keep this in terms of a database. Again, running loads of assumptions around how your product and business actually works. But I'm just yes. thinking about this from a behavioral perspective, that not only is it the decision makers, but the actual customers using the product, the desirability to live natively within your platform just increases.
Massively. And I'll give a shout out to our partner DocuSign, who, even though we were a fresh-faced startup with not much revenue, saw the vision of what we were trying to build, and very early into 2020, we signed a global ISV license agreement with them so that our customers around the world, because typically they sell their product by jurisdiction, so regions of the world. But we were able to obtain a global license so that our customers anywhere in the world could use DocuSign embedded within our platform. And that's just part of the service. So if you're using Clara, you don't have to worry about getting a separate e-signature license with a provider, because you get to use DocuSign for free as part of the Clara service.
And that immediately makes me want to now segue into partnerships, right? Because you've mentioned Techstars as channel partners. You went to 500 Global through that. You were able to work with DocuSign as a partner. There's so many partnerships that seem to be developing in building the business out. Can you just tell me a bit more about the strategy that you embedded there? Because there's one, you've got the channel partners to market and to customers to be able to expand that reach as well. But then you've also used DocuSign as a partner for your customers themselves to collaborate directly in terms of putting your offerings together. So how would you categorize what your different partners were and your approaches towards developing those partnerships?
Well, let's start with the second point first, because I think this is fundamental to the success that we've had to date in establishing and maintaining partnerships. And it comes back, as most things do, to the problem statement that we started with and what we're trying to solve for at Clara. And what gets our team jumping out of bed every morning is that we're solving a serious problem. This is not, the next version of a glitzy app that you've seen the previous 10 versions of. These are real problems that exist everywhere that we're trying to solve for. And when we lead with the problem and speak to people in terms of driving important solutions that are going to improve people's lives, you get their attention. People are not just purely economical accounting machines. Everyone wants to make money as part of their business, but they also want to believe in what they're doing. They want to start their day with the sense that their work is meaningful, and when they finish their day, that they've added value to other people, whether it be their customers, stakeholders, what have you. Yes, everyone needs to make money, but there are, I think, more fundamental drivers to our passions and desires and motivations as human beings. And our goals, our mission and vision statements are just so focused on solving these fundamental problems in the space that we're addressing, that I think it's been relatively easy for us to get buy-in from, large global corporate partners who want to go with us on this journey, because they see the vision, they understand the problems really well, and they want to help people. And we operate from the position always that, the pie is not a set piece. It's not a set piece that can just be carved up and then you're fighting over how big your piece is. It's all about massively expanding the pie and sharing it out amongst people who are more long-term minded, like I said, who want to go on the journey with you and can contribute their expertise and solutions into what we are doing. So whether it's a venture builder and accelerator partners like Antler, 500, Techstars, Plug and Play, Baobab Network in Africa, whether it's digital signature solutions like a DocuSign or Checkout.com that assists with payment processing, Microsoft, who is an early supporter. These guys got it, and most of them, in one way or another, support business owners, people trying to start businesses, particularly in the tech space, and want to align, their money-making goals with doing good and helping other people do better. So from the perspective of generating and securing these partnerships, of course it took work, but we started with a lot of inbuilt advantages because of, I think, what we're trying to do.
And to that point, so once you've secured the conversation and you've got clarity on the problem and genuine intent, and this makes a lot of sense for both parties involved, I really want to go into how you secured those contacts in the first place, because these are extremely reputable organizations that they've got people hunting and cold calling and cold emailing them all the time. So how did you actually secure these meetings to even open those doors for partnership in the first place?
Look, it's for me, your network is your most valuable asset. And there was no cold emailing in any instance. It was just working the network and figuring out who had the best and most senior into these organizations. When you're going after partnerships or business of large organizations, I mean, it is so simple to get lost in the haystack of the bureaucracy. So you got to try to find a way into a decision maker and understanding what that org structure looks like and who is allowed to make decisions over what. And I think one of my superpowers has always been networking. But it's not just the surface networking, like, okay, let's get the business card. It always starts from the standpoint of, okay, you seem like a person that I would like to know. There's value alignment here. I'm going to try to help you in the first instance. How can I help? Right. And we see this with so many of the people that we work with at these organizations. They always start from the perspective of, how can I help you? I'm not asking for anything up front, but I think we're aligned here. You're a person that I kind of want to stay in touch with. I get energy from working with you, having a conversation with you. I want to help you. And I think I've always been like that. And our team is like that. And so when you go back to the network and you go back to the well to withdraw from the well, you've made a lot of deposits over the years into the well. So when you go and withdraw from the well, if your assumptions are correct about the type of people that you've been supporting over the years are correct, people are really willing to help. But you have to, if you're trying to go after these large organizations, you have to figure out who is the decision maker for what you're trying to get a decision on. Try to get into that decision maker through the network. And it might take 3 or 4 different connections zigzagging around to get to that decision maker. But doing people's work for them on this is really important. And I learned this from a few mentors years ago. You can't just ask for an introduction. If you think you've gotten to someone who can make the introduction, you need to do all of their work for them. So you realize that they're able to make the introduction, and then you say, okay, right now, like within the next 5 minutes, I am going to write you an email that you can either copy paste, and I'll write it for you as if it's from you, or if you prefer, I can write it from me to you so that you can just simply forward on to the relevant contact person with a one-liner saying, I think you should talk to this guy. Do all of their work for them. People are, especially people that have key nodes within their network and no key personnel. These are busy people. So they should be able to perform the task in less than 10 seconds based on you teeing it up for them.
And how did you identify those people in the first place? Was this a thing of LinkedIn and connections and who might know this person? Were you on a Techstars community group and say, listen, I'm trying to get a contact with this person who might know that? How did you identify who the key person was in the first place? And I'm getting to a level of granularity because I also pride myself in a form of networking. But for a lot of founders, especially more introverted founders, this is not natural to them. So if we can get the actual networking playbook in terms of how is it that I unlock these opportunities, it would be fantastic.
Yeah, look, I'm a big believer in focusing on your strengths and not working on your weaknesses. I don't think you should try to be leveling yourself up. And my coach Mike, shout out Mike, that's his playbook, and I'm a deep believer. So one of my strengths is doing this. I'm not going to go learn how to program, right? I understand the concept. I've watched your team do it, but I'm not going to go try to work on that skill. That's not a good use of my time, and I'm not being a big supporter of the company if I learn how to code, right? In theory, yes. If I have unlimited hours, sure, but I don't. So if you're an introverted founder, let's say your domain is tech, right? You're a technical founder. You're going to be the CEO. You're also going to be the CTO. Then the first thing you need to do is go hire someone and maybe give them a co-founder title who's really good at BD, because you can build the most beautiful product in the world, but you need to sell it. So don't try to work on your strengths. Don't try to work on your weaknesses. Improve your strengths, and then hire or add team members as appropriate who cover you off in the areas where you're weak.
I love that as let me retake that question and give you a proper answer. And I fully agree. The best leaders are often spiky. And this is the most important thing, is having a team that's complementary, right? Where you can be excellent in your niche and have other people be excellent in where you're weak. And it doesn't, I think a huge part of where, again, this colloquialism of imposter syndrome kind of comes from is people over focusing on their weaknesses and trying to address that because this is everything that they need to be in one role instead of trying to build a complementary team that can do that for them. So I love the fact that you pointed that out. So thank you, Patrick. You've spoken already a lot about partnerships, and thank you for giving a bit more on the networking side of things and the complementary team side of things that we got into. But another aspect to horizontal integration, if I'm taking this a step back to what's the strategic theoretical framework incorporating this growth strategy. So there's partnerships and there's acquisitions. You acquired a business, right? I don't think many startups do that when they're still a startup or even a scale up. I think the main place that acquisitions usually happen is in M&A, in private equity, or in medium to large companies. So I'm super fascinated, and it was the company's called Back the House of Both Corporate Services. Tell me about just that entire decision. Where did the idea come from? When did you decide to actually take the leap? How did you merge them in? Like, tell me the whole story of that.
Sure, I'll try to be brief. Again, one of the unfair advantages we have is that we've got a number of senior corporate lawyers on the team who can be quite creative in the way that you structure something like an acquisition. To your point that you're making, the assumption would be that most early stage companies don't have the cash to go and acquire other companies, which is broadly correct. But you can structure things in certain ways so you don't kind of kill your cash pile. Obviously, provided the counterparty is keen on the deal. Both was a provider of company formation and management services, very well respected company, and our ideal customer profile, or ICP, is a business that needs to set up a company or a holding company in one of the 5 to 6 jurisdictions we address. These are all, as I said earlier, common law jurisdictions that investors prefer to structure their investments through. So, of course, places like Delaware, but also Singapore, the Cayman Islands, Abu Dhabi Global Market, or ADGM in the UAE, which is an English common law jurisdiction. And both was operating from ADGM and had a very strong roster of clients that they managed the holding company for. So their fundraising vehicle. And after a few discussions with the founder, we agreed terms on the acquisition, because if we can kind of control and manage the company, it's very easy and natural for the owners of that business to be introduced to our other suite of products. So an easy example would be our cap table solution. If we are managing that company, i.e. the annual filings around it, or if they need to bring on new shareholders or remove a director, whatever it is, we do all that management through the Clara platform. But we can also introduce them to the cap table solution, and they can manage all of their equity through the system. So for example, if they wanted to create an employee share option plan or an ESOP, they can create that ESOP on the system. And when they go to distribute equity under an option grant agreement, they can sign that option grant agreement through Clara, and the cap table automatically updates with all of the vesting dates, all of the exercise prices, all of that. It does it all for them. But
that's convenient.
It is turbocharged from a user experience perspective if we manage the entity, because it's not just a matter of doing it digitally on the platform. There is still a record update with the relevant government that needs to be implemented to ensure that the legal position is accurate. So just updating a digital cap table solution doesn't actually mean, for example, that you've legally issued shares to someone. In most jurisdictions around the world that investors prefer, a deal has not been closed until the government record displays the new changes. So it's not just a matter of doing it digitally on the system. Delaware is a bit of an outlier in this. I
think it's the equivalent of don't celebrate the deal till the money's in the bank, is like don't celebrate their shareholding until the government acknowledges it.
Correct. The government has to spit back the new register of shareholders or register of members to say this is the official position now, at which point the deal closes, or this is the these are the members of the board now, and then the deal closes. So with that acquisition, that allowed us to add a whole bunch more companies into our system. And whereas both could only provide them with, the basic kind of company management services, and they did a great job at it. Once we brought those companies onto Clara, we can now introduce them to all the adjacent products that we offer: document automation, cap table management, data room management, and all the way through.
Mm.
And this is a growth channel that we are continuing to execute on, and will continue to explore across the range of jurisdictions that we focus on.
And how's that growth channel going?
It's going well. I think, again, going back to our earlier commentary around building for point solutions as opposed to building an OS like we've built, the value prop is now really strong. And when we go and talk to someone who we know is having their company managed by, another incorporation specialist, and it's not a pricing discussion, right? It's not like, oh, come over to Clara. I'm like, well, what's your price for that? I'm like, forget about the price. Not only can we manage your company and everything's done digitally, but by virtue of being our customer, you get all this other stuff that is automatically created for your company in our digital environment. So yes, you can manage your company, but you can also see this beautiful cap table. You can be creating legal agreements for this company. We've got this data room that has unlimited storage. You get all this stuff. So what you're currently getting 20% of what we can give you for the same price that we can give it to you for.
Right. So that makes a lot of sense in terms of how do we really not just improve the value prop, but the actual stickiness of this? How do we take someone in when they've got problem A out of A through Z, knowing that they're going to need everything else, and bring that into them? And also in a way that's authentic and affordable, because so often when people approach specifically in like consulting and professional services world, and from my own experience, trying the land and expand strategy to sales doesn't work because people can smell it from a mile away, right? If you're going to come in terms of and try sell me one thing and expand as well, that's immediately trust damaging. But the fact that it's like we're selling you this one thing, but you get everything else for the same price, right? Just stick around.
For sure, but there's also differentiation of the product, right? So we have a very strong and useful freemium product that you can use. So if you wanted to go build your cap table on Clara today, you can do it for free. You can't unlock all of the features that are there. You can go on and create a few different documents for free. You can use DocuSign for free, right? We're proud of the product, but I think we're also such believers in it that we think if you try it, you're going to like it and you're going to want more of it. And you'll get to that point where you want to upgrade and then get the full power of the platform. So if you've already incorporated a company in one of the jurisdictions that we address, you're going to want to migrate the management of that company to Clara. Because once you do that, then you really, as I said, turbocharge your whole admin experience in dealing with all this stuff, because you get the fully integrated solution.
Yeah. And what you click for me now is there's a fundamental belief, and I think I'm repeating myself just in a different context now, is a business is inherently very complex, but I genuinely believe that it doesn't need to be as complicated as it is. And I think this is where I align so much with the philosophy of what you're doing, because you're doing this fundamentally from the admin side of things, as you started off and pointed out. And Metavolve is doing that from a strategy side of things. But the point is, how can you focus on just being an entrepreneur, building the business, worrying about your team, worrying about your customers, caring about your stakeholders, and make a lot of this stuff that's inherently required and you need to keep an eye on and do well, but a lot less complicated to do. And that's a very core part of what you seem very driven to do, because especially, it's why I've got an issue with consultants in general, is they get this kick out of being complicated. They think all the jargon makes them special, and making creating this barrier to entry for their own customers to be able to really understand and consume what they're doing makes them feel important. And it's just like, it should be a lot easier. And I think you're doing an awesome job of doing that.
Well, no, thank you, Cam. I mean, look, historically, this stuff was complex before, the internet was invented, software, and then it's just unbelievable the innovation that unlocked, and people's ability to share ideas and then build stuff that can be used at a distance, right? We used to have to be physically together to do this stuff, like signing an agreement. It's obviously no longer the case, and we are the proverbial frogs in the boiling pots because we've lived it. We haven't noticed how revolutionary these changes have been, and the business models that obviously it'd be impossible for these to exist 20 years ago, let alone 40 years ago. So yeah, we feel very fortunate to be building something at this juncture, and the light speed that the whole kind of tech scene is going into with AI and everything else. We think it's really exciting.
Yeah, it's an incredible journey for you to be on, and to play a small part in you sharing it. Patrick, the last thing that I probably want to chat about when looking at the past/present is, we've spoken about it a lot, but I think there's so much complexity to really unpack around the how of your geographical expansion, because there's the two sides to it. It's in terms of the fact that you've got clients from all over the world, but you've also got different, like, common law jurisdictions, frameworks, regulatory frameworks. Again, excuse me if I'm butchering jargon here. I don't think I am yet, but I feel like I will inevitably if I keep trying. But like, there's so many different countries, right? And legal frameworks that need to be embedded into what your business is in order to be able to expand geographically. That I just want to know how you manage the growth on both sides of it.
So, yeah, it's so important fundamental point here. We are not trying to address things for the laws of every country around the world. We're doing it for a small subset of those. To name a few, again, anything kind of emanating from common law, which is obviously English or UK law. That includes places like Delaware, Singapore, Cayman Islands, ADGM, DIFC, places like Ireland. For what we're trying to do, particularly in addressing fundraising space, private equity, the laws are broadly similar. You're really just solving for tax around the edges. So some basic concepts, right? Under the laws of these jurisdictions, a company can have multiple classes of shares. So you could have the A shares, the B shares, and they could have different rights attaching to each of those shares. Things like convertible instruments, like a safe that a lot of your customers would use to raise money, or a convertible loan note. These things are permissible under the laws of the jurisdictions. A concept like vesting your shares. So a founder vesting their shares, saying, I have these shares, but under certain circumstances, I have to, or the company can buy them back from me, or force a buyback of these shares. I can contractually agree to that up front. These concepts in a lot of civil law jurisdictions, for example, don't exist and are completely unenforceable. So signing a safe in a civil law jurisdiction, in many cases, it's unenforceable. The investor cannot enforce their rights because the concept of a convertible instrument doesn't exist, or multiple classes of shares doesn't exist. A company can only have one class of shares. And this is the case in many countries around the world. And that's why sophisticated investors will really only invest through certain jurisdictions. So if you look at, the most prolific accelerator in the world, Y Combinator, they only will invest in companies from 4 jurisdictions: Delaware, Canada, Singapore, and the Cayman Islands. So if you're operating a UK-based tech startup and you're an amazing fintech and you get into YC, they will not invest in your UK company. You have to go and create a new holding company on top of your UK company, which then acquires the shares of your UK company. So that becomes your operating company. You've got your holding company up here, and then YC will invest in you.
And the reason why is because they don't want to change their framework with how they operate and how they go about investing in companies. They want to keep it
from a tax perspective
simple.
and from a tax perspective and other reasons, they see these as the preferable jurisdictions, and they've gone through some changes over the years in terms of that list. But that's an easy, and Techstars has their list, 500 has their list, but broadly speaking, the vast majority of these investments of venture capital firms and accelerators globally have been done through a handful of jurisdictions. And really the fundamental idea behind that is that they need to be confident they can enforce their investor rights. So if the founders are getting fiddly, or they're not doing what they're supposed to do, there is an efficient court system in these jurisdictions that can help the investors enforce their rights. So, it's important what the words on a page are, and you can agree all these rights and obligations under an agreement. That's all great. But if something goes wrong, you then have to take the steps of actually enforcing, right? Because if the counterparty, you say, look, you promised you do this, you're screwing around with my money, you're not allowed to do that. The person just says, well, okay, sue me. And if the agreement is governed by the law of a jurisdiction where it might take 5 years to get an award and the judges have no idea what these terms mean, good luck to you, right? It doesn't matter what it says on the piece of paper. It matters at the enforcement level, how you can actually compel the counterparty to do what they have to do, or take shares back or take money back or whatever it is. So we focus on these jurisdictions for those reasons, because the investors are very confident that if push comes to shove, they can enforce their rights, but less on the downside. Also that things like convertibles or options or vesting are recognized under the law. And of course, fundamentally, in each of these jurisdictions, everything can be done digitally. There is no requirement, for example, for a notary public to come in and put some wax seal on the piece of paper to make it an official document, or for everyone to get into the same room together and put wet ink on a piece of paper to make the agreement official. Everything can be done digitally, which means everything can be done through our platform.
Patrick, one thing I loved about speaking to you is that you've taken something complex and given a pretty simple answer to it. Well, acknowledging the complexity of it. I mean, you're speaking to the fact that, like, obviously legal frameworks are inherently complex, but there's a simple reason as to why. And it's just because this is how the VC ecosystem likes to operate. Lots of startup founders don't really know this and understand this in terms of why they need to register their businesses in certain places. It's going to make it a lot easier in your journey moving along here. So let's do this for you. Make sure that we are already set up in all of these jurisdictions so that when you come through our business, we can set it up for you already. It's almost, you've got the proverbial supply chain completely set up and ready for any startup anywhere to really hit the ground running and make it a lot easier to be a venture-backed startup in the first place.
Yeah, no, thanks, Cam. I appreciate that. I mean, that's obviously what we're trying to do. Like I said, fundamentally, most importantly, we're in love with the problem. We know it exists. In the context of your audience, which predominantly is continental Africa, we have hundreds of customers across Africa. We were very early into Egypt a number of years ago. We've got a very strong brand in Cairo. I was just there last week speaking at a conference. But increasingly, jurisdictions like Nigeria, South Africa, Kenya are coming to us for everything from cap table management solutions to digital company formation. And I don't have to tell you that it's super challenging, especially these days, for African startups to raise venture after going through this kind of recent venture winter. And it also is, unfortunately, and this is the case across emerging markets, not only is it more difficult for them to raise capital in the first place, it's also more expensive for them to do all of this legal stuff because of where they're operating from. They have to set up a second company. They have to attach that second company to the initial company. So they've got a complex structure kind of from day one by virtue of the legal environments they're operating in. So as much as possible, we are trying to reduce those costs and simplify the lives of founders across the continent so that they can get back to focusing on their business.
100%. So Patrick, on that note, what would you say that the rest of 2024 looks like going into 2025? What does the future look like for Clara and Patrick?
There's a couple new jurisdictions that we're going to be going into in the next 12 months and launching the solutions for, which we're excited about. We have we think, very compelling fintech product that we're going to be launching to complement the other solutions that are already there on the platform. I'm not going to say too much about that. Happy to come back on the show later in the year and have a chat about how that's going. But again, I just come back to the painkillers versus vitamins, right? We've now, with all the, we've got 5,000-6,000 businesses around the world using the platform, and people are very happy to give us feedback and talk about the things that they'd like to see on there. And so we've got a very good and rich data set of what people want, what they're willing to pay for, and we're going after those things big time.
Fantastic. Sounds This rocket ship just continues to take off, and unlike actual rocket ships back in the day of losing pieces, you're adding on and just accelerating. Patrick, just to close off, what's the one question that I haven't asked you that I should have asked you that you'd like to answer now?
Well, I think one of the questions could be around Dubai, right? Dubai is our HQ. The idea was founded in Dubai. Why Dubai? And in the context of Africa, does Dubai have any significance? I think we're seeing the importance of Dubai to Africa for a few reasons. Number one, the UAE is obviously an emerging market economy, and lots of the problems that exist across Africa have, at least historically, existed here. Courtesy of Emirates Airlines, Dubai is the most connected city in Africa. So you have more direct flights to African cities by a country mile than any African carrier. So lots of African companies meet their investors in Dubai, as an example, because everyone can get here in one flight. We're seeing a steady stream of African founders across the continent who want to establish an HQ here, because in a number of countries, it can be challenging to, once you get through, say, a Series A or a Series B, to bring in a lot of firepower at the C-suite level. So, for example, you want to get a world-class CFO into the company. These guys sitting in different cities around the world might be a bit reluctant to move a family to a certain country on the continent, but a compromised position could be Dubai. And because they can get in a direct flight to the city of main operations of the underlying business, all of a sudden it becomes a nice gateway to address the African continent. And, a lot of founders are coming here to get visas and even establish a home here themselves. So we're seeing amazing cross-pollination of the African tech and investor ecosystem happening here in Dubai and more broadly, the UAE.
I must say, Patrick, you're very naturally a compelling human being, because I've never really been sold on Dubai, but now I'm contemplating it. So great work there. Patrick,
and I gotta give a shout out to my people down the road in Abu Dhabi too. They're building pretty incredible stuff there, and Riyadh. Yeah. You should come see what's happening in Saudi. That's a whole different pod.
I plan to take you up on that. Patrick, Thank you for being on the Founder Files. It's been an epic conversation. Please keep being the incredible, wise, authentic human being that you are, and keep making a difference to all founders around the world.
Thanks, Cam. It's been great. I look forward to seeing you soon in SA.
My first reflection for today can't be reflected on enough. It is absolutely crucial for an entrepreneur to not only understand, but deeply care about the problem they're solving. On top of that, it's critical to understand the industry and market and have enough of a network to leverage. If you don't really care about the problem, you don't know the market, and if you don't have a network in the industry, then you should probably contemplate why you're starting your business in the first place, or at least how you're going to be able to get it off the ground, because you definitely swimming upstream. Second, I've just learned a lot about the strategic value of great legal expertise. Look, I know it's a necessary function in the business, and this is probably my own ignorance or naivety speaking, but I never considered an acquisition to be viable before a company is well and truly scaled. Having the experts to structure a deal in a clever way can unlock opportunities that likely wouldn't be possible without greater scale. So if I'm ever going to go after something that I think might be a bit big to chew off, I'm definitely going to consult with the right lawyer to make it a bit easier to chew through, and actually probably go through Clara for that too. Finally, the importance of a complementary team. Having a solid network is crucial for any startup to succeed, but that doesn't have to come from every founder. I love this authentic share about playing to strengths, and I believe in that so strongly. In business, you need someone who can focus on the internal side of the business and someone who can focus on the external. These are fundamentally different strengths and perspectives. So play to your strengths, stay in that lane, and get a team of leaders whose strengths are your weaknesses. If you do that, you'll reduce your self-doubt and just accelerate your growth because you have other people that you can lean on. And if you want more epic insights, then please don't forget to follow us on whichever platform you're listening to or watching this episode on, and follow the links below to engage with us on our social channels and get some short snippets of further wisdom from our amazing guests. Until next time, cheers.